Hi everyone and welcome back to today's morning report on Tuesday the 26th of January with me, Rich Pre-Market Analyst at Handset Markets. Moving on to gold as my final chart. And we've actually had a breakout on gold, haven't we? But is it something that we should be backing? Well, I mean, I've been sort of saying that I'm a bit disappointed in this rally, and it has been a rally. You can see the sequence of higher lows in the last sort of couple of months. And we've now broken out to an 11-week high on gold, dating back to obviously the beginning of November. Is it something that we should be getting excited about? Well, I think it is a positive move. Yes, I'm still not entirely convinced about the strength of it, but yes, I've got to go with it because it's breaking out and you're getting the momentum indicators confirming. Obviously, the RSI confirming these higher lows sequence, stochastics as well. A little bit stretched potentially near term, so I think you'd be looking more to be buying into the dips than sort of chasing this rally. And already we've sort of seen a high of about $10 on the day, which is around $1,117. Just pulling back slightly in the last sort of hour or so. If you go on the hourly chart, you can see this run higher that's dragged the RSI into overbought territory. So you sort of might see a bit of a near-term correction. I'd be looking out for sort of between 105, let's say 105 to 110 area. There seems to be a bit of a sort of a line of support between 105 110. So if you saw another higher low within that band, then I think that would probably be fairly positive, because you do have this sequence of higher lows on gold, and it is pulling higher, and you have this sort of uptrend over the past sort of week or so, couple of weeks, and that uptrend currently comes into place. Around 1101. So there is the prospect of just a minor correction, I think, and you'd be buying into that dip. But I don't think it's necessarily something that we're going to get too excited about. But you do have to start now, obviously, thinking about, because you've had the breakout above the 1112 resistance, and you're now looking at the next overhead level. Well, there isn't a great. I mean, in terms of the resistance levels, obviously there is overhead supply from the sort of October run higher, but there's not a massive amount until you get to the 1140 level, which is where you had two kilos from December and March in December 2014 and March 2015. Is where those old lows start to come back in again. So that's where you start to get the key resistance starting to come in. So there is a prospect of further gains, and that base pattern that we've got completed on here does actually give you an upside target of around about 1130, 1132, depending on your sort of calculations, really. So there is possibility of further gains, and I think buying into these dips is probably now the way to play it, because you do have the sequence of high lows. But again, there is something still holding me back on gold. I'm still a little bit reticent about it. But you've got to run with the gains on this, because the chart is telling you higher lows, higher highs. Now, obviously breaking out higher high, and therefore you're sort of buying into the corrections. But be careful, I think, for a change in sentiment, I would say. So I wish you good luck in your trading today, and I'll speak to you again tomorrow.